Hey friends, I just purchased a dividend stock that is yielding 8% and it's trading at a PE ratio in the 8 range. I also think this stock may increase the dividend by another 8%. This is a smoking hot value dividend stock. In my personal humble opinion, I am talking about Altria. I want to cover Altria in the video today. I purchased more shares today. I purchased more shares last week. Of course, this stock carries risk. The government, the FDA, they are coming after this company in a big way. News surfaced just today that apparently the FDA may halt sales of JUUL products in the United States. Altria owns a 35% stake in JUUL, and so there are headwinds. There is risk with this company, but I believe it's a contrarian play with value. Get ready, everyone, for a really exciting dividend stock investing video. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone. So I want to start the video today with some metrics and some history behind my purchases in Altria. Check it out on the screen in front of you right now. My patrons have already seen this because I share all of my stock trades over on Patreon. Check out the pinned comment below for a link to my Patreon. There is so much bonus content over there. As you can see on the left-hand side of the screen, I purchased some Altria shares last week as well. I see this as a deep value. I've been buying this stock since 2009, I believe. I started buying in the $15 range, but I still see value here when a quality dividend stock is down and the starting yield is up, and I believe that the cash flow, that the numbers can sustain the dividend. I am a buyer. This is not a core stock for me, but it is a close runner up. And so last week I purchased more shares at $45.18, and that implies a starting PE there, or a forward PE there for 2022 of 9.3, 2023 of 8.84. I already thought that was a value. Of course, it is based on these numbers in my humble opinion. And my starting dividend yield on last week's purchase was 8%. And the 5-year CAGR, compound annual growth rate of the dividend on average, is 8.1%. But as you can see on the right-hand side of the screen, it has fallen now another 7.2% from my purchase price last week. So I bought more shares today at $41.91. And based on the EPS estimates, now the forward PE is in the 8s. It's solidly in the 8s, both for the current year and for next year. And so my 2022 forward PE on the purchase price today was an 8.64. Now, with the dividend per quarter of 90 cents or $3.60 a year, my starting yield from the purchase today is a staggering 8.6%. Now, I want to share something with you. The payout ratio right now being 74.2%. The reason I believe another 8% dividend increase is right around the corner is 8% gets us to an 80% payout ratio. If I just take 74.2%, I multiply by 1.08, I get to 80%. I know from the company they have a stated goal of an 80% payout ratio. That's why I believe that an 8% dividend increase could be right around the corner. And so I get an 8.6% starting yield. I get an 8.64 forward PE for the current year. And I believe an 8% dividend increases right around the corner. This is a rare combination of dividend growth and value. Of course, there is risk. Now, the market cap is $75 billion. For those that don't know, Altria is a company that sells products here just in the United States. They split off from Philip Morris. I own Philip Morris as well. I own BTI as well. I own Universal as well. I hedge and I diversify by owning all of the SIN stocks. SIN stocks are riskier, but they boost my dividend yield portfolio wide. And so when I'm managing my overall dividend stock portfolio and I look at my overall dividend stock portfolio yield, buying shares of Altria boosts the overall portfolio yield because the yield on Altria is so strong. Now, that being said, there is risk with this, so I want to share a model on how I look at Altria from an investor's standpoint. As you can see on the screen in front of you right now, this is how I de-risk Altria a little bit. Now, whereas I'm buying shares of Altria right now, whereas I'm reinvesting my dividends of Altria right now, when the stock price goes back up, I will probably take my dividends as cash and I will either use them to pay bills or more likely I will use those dividends to invest in other companies. And so I look at Altria as a lot of biotech investors look at biotech. What happens with a lot of biotech investors is these biotechs are so risky when the stocks start shooting up in value, they will sell off shares to recuperate the principal that they put into the biotech stock. And then they will let the rest of it ride, if you will, on the house's money. Now, I don't take money out of dividend stocks by selling shares. I never sell. But what I could do, and what I probably will do with a stock like Altria once the share price recovers, is I will take my dividends as cash. And again, I will use the cash to pay bills or invest in other stocks. Now, let's just assume that this dividend yield right now of 8.59%, it just doesn't ever grow again. It just is what it is. Well, the model on the left shows that after 6 years, I have taken out 50% of my capital invested in dividends alone. Now, I'm putting taxes aside for this particular analysis, but of course that is taxable dividends, qualified dividends here in the United States. After 12 years, all of the principal is taken out as dividends. So one way to look at it is I can de-risk my Altria position by just putting money in now and then taking all the dividends for 12 years. After those 12 years, what's left, which is basically, because I haven't sold any shares, is the shares I purchased, is all on the house's money, putting taxes aside. Now, we all know, however, that the dividend on average has grown by 8% per year for the last 5 years. I think the next dividend increase will be 8%. But let's be a little more conservative. Let's say the dividend will grow by 7%. If that dividend grows by 7% per year on average, and I'm not reinvesting dividends, I'm just taking cash dividends, we can see what a yield on cost would be by year. First year is 8.59%. Next year is 1.07 times 8.59%, which is 9.19. The third year is 9.19 times 1.07, so on and so on, so forth. You can see that that yield on cost goes up pretty substantially. After about 5 years, I get half my money out. After about 9 years, I get all the money out. And so these are just some hypothetical models, but the reason I'm sharing them is a lot of investors look at something like Altria as carrying a lot of risk. And I see risk there as well. I see risk of litigation. I see risk of the government coming after them. I see risk of government agencies like the FDA coming after them. I see risk of all of the above. And so what I'm doing with Altria is I've already de-risked my portfolio quite a bit, because for a while there, when these stocks got more expensive, I was taking all of the dividends as cash. And so I've already gotten a lot of cash out. Right now, I'm reinvesting all of those dividends, and right now I'm buying net new shares. But again, when these stocks improve in price in the future, I will probably take all of those cash dividends and take cash out again. I think this is an industry where it's important for investors to realize the risks and to consider taking cash out. That's at least what I do in my personal dividend stock portfolio, because there's heightened risk in this particular sector. I want to keep going. I want to share some news that's going on with Altria right now. Before I do, if you're enjoying the video so far, please go ahead and smash that like button. It means the world to me. It helps this video reach more people out there on YouTube. Please also don't forget to subscribe with the notification bell, because you will be alerted as soon as I have another video. I'm producing new videos all the time. Now, as you can see on the screen in front of you right now, I want to go into some of the news with Altria. Why is this stock plummeting? Boy, this particular stock is down 9% today, and the reason for that is the FDA allegedly is preparing an order for JUUL to take its product off the US market. Good grief. And so JUUL has just been a product that has had so many problems, and the stock is down 9%. I think the stock is also down today because the Biden administration yesterday said that they are going to attempt to lower nicotine levels in the traditional products that Altria sells. Boy, why does the government have to keep meddling in their business? It's just insane, in my humble opinion, but it is what it is. And so certainly this industry carries risk. All industries, though, carry risk. As you can see on the screen, politics these days are different than ever before. All the prior rules of long-term investing should be in question. Big government is here. Freedom is in jeopardy. I'm doing the best I can to invest in a world of terrible change and uncertainty. I use the word terrible there for a reason because I think most of the change these days is terrible. And if you've been on my channel for a long time, I've been talking about sin stocks forever. The PPC Ian that was talking about sin stocks in 2018, hey, it's the same PPC Ian now, but my worldview has changed. Boy, has my worldview changed a lot. And I'm just saying, I have less certainty in the future now than I did in 2018. I think most of us do. And so I'm doing the best I can with the cards that are being dealt to me as an investor. But I know that any industry is at risk right now, and the government, quite frankly, unfortunately, looks at all of the industries out there, all of the companies, the publicly traded companies, as fair game for their personal bank account, in my humble opinion, and that scares me. And that being said, I look at the universe of opportunities out there for me as an investor, and I keep coming back to dividend stocks. There's more risk with anything in life these days as compared to 2018, and I have to do the best that I can with the cards that are dealt. And certainly, I can go and invest in dividends and automate income and free myself from the burden of having to work, or I can do nothing. And I continue to see that dividends are the way, for me at least. But I'm not going to fool myself. The way that the government has evolved over the last few years is mind-blowing. And it certainly creates a lot of added risk and added turmoil for investors, in my humble opinion, for dividend investors and all kinds of investors. But let's keep going. I want to share some more information with all of you today. Check it out on the screen right now. What I want to share is just some history. Altria paid $12.8 billion for their 35% stake in JUUL. Already, they've written $11.2 billion of that off. Now, an important note, IQOS is also banned in the US due to alleged patent infringement on Reynolds, which is a subsidiary of BTI. Good thing I own BTI. I have a note here on diversifying and hedging. I diversify risk by owning all of the sin stocks. BTI, whatever I lose over at Altria will be picked up at BTI. But also I diversify by owning other types of stocks like Starbucks, because Starbucks, in my humble opinion, I'm going to link in the pinned comment below. I recently did a video on how Starbucks is my #2 stock right now in terms of position size. Starbucks is, in my opinion, the socially acceptable alternative to Altria. Everyone hates Altria. The government hates Altria. Society hates Altria. People look down on Altria. But Starbucks coffee, that's just fine. And so it's a socially acceptable alternative, in my humble opinion. Responsible adult consumers, one way or another, are going to find a way to take a break from their day-to-day life. There is so much stress in modern living. There are so many things going on in modern living. Can't people just have a moment to do something enjoyable for themselves? That's what Altria is to responsible adult consumers. That's what Starbucks is to responsible consumers. And so, quite frankly, I hedge, I diversify. That's why I own Starbucks. That's why I own Altria. That's why I own all of the sin stocks and all of the stocks that are not labeled as sin stocks but could be used as alternatives to Altria. And so I own all of those types of stocks in my personal dividend stock portfolio as part of my hedging strategy. Now, I want to keep going. As you can see on the screen in front of you right now, the next thing that I want to share is some analysis. So Altria is down 9% today. I think it is well overdone because Altria's market cap is $75 billion. If you take 9% and you multiply by $75 billion, that means $6.75 billion of market capitalization was destroyed today on this rumor that the FDA is going to ban JUUL sales in the United States. And maybe this rumor is truthful, but we already know that they're carrying JUUL at a value of $1.6 billion on their books. So $6.75 billion was wiped out, but we know they're already carrying it at $1.6 billion. So doesn't it seem that the sell-off is a little bit overdone? Let's look at it by income. Now, this really fooled me. I thought that they were making a positive income from JUUL when I looked at their numbers, and I'll show you in a minute why I thought it was positive. But someone on Twitter actually clarified what I was looking at, and I'm thankful for that. That's why I love this community, because we keep each other better as investors. We help each other improve as investors. But what I realized is they're actually losing about $100 million a quarter on JUUL. And so they earned in Q2 $1.9 billion in earnings, but they actually lost $100 million on JUUL. Now, it's really hard to know what's going on at JUUL because I just see one number, but I don't know what's happening with international sales, what's happening with lawsuits. I just know at a high level that they're losing money on it. And so again, why would this stock lose $6.75 billion in a single day when they've already written off most of JUUL and when they're losing money on JUUL? And so that being said, some important notes. We just don't know what JUUL's doing on any other kind of detailed level. And I don't know, maybe they're making money in the US, but they're losing money internationally because they operate internationally. But what I do know in the scheme of things is that a smaller subsidiary of a bigger business. Yes, it has opportunity to make them a lot of money in the long run, potentially, but I think the sell-off is overdone. Now, one thing I would say is many U.S. consumers who cannot purchase JUUL anymore, if all of this does come to fruition, maybe they'll move over to ALTRIA'S traditional products. And even if they don't, this is why I diversify. Maybe they're going to move over to some products by their competitors, such as Philip Morris, BTI, and so on and so forth. I own all of the SIN stocks, and that's why I diversify in my SIN stock portfolio. And boy, if these consumers can't purchase JUUL anymore, they want some kind of break in their day to enjoy life. Maybe we'll see more of them over at Starbucks for all we know, and that's totally socially acceptable in the norms of society right now, which is so interesting how our world has just evolved. Hey, I own them all. I'm an investor, and I enjoy the cash flow from all of these companies, which I think they should all operate because I generally believe that responsible adult consumers should be able to make decisions for themselves. They don't need the government to tell them what to do. Let's get into some of the numbers, some of the financial reports. As you can see on the screen in front of you right now, the next thing that I want to share with all of you is their income statement. And this is the income statement from Q2. You can see that their revenues are down year over year, but actually the reason they're down is they sold off their wine subsidiary. If you add back in the wine subsidiary, they actually slightly grew year over year. But what I want to highlight is all the way on the bottom line, they are earning in Q2 on a quarterly average 1.959 billion. So they are earning some great money, huge profit margins here, and it's up 37% year over year. So we can see on the income statement that things are looking pretty good for this company. Now I want to show you why I got a little confused with all of this when I was preparing for the video today. Check it out on the screen right now. And I'm thankful for the Twitter community. I'm on Twitter. I'll link to that in the pinned comment below if you want to follow me there. But on Twitter, some of us were looking at these details, and this is where I get confused. Is I was digging really deep into ALTRIA'S financial reports from Q2, and you see all the way at the bottom, it says that JUUL, and you see 100, and that stands for 100 million for Q2 2022. And I see a positive number there, and I just assume, oh, they made 100 million. But if you actually look at the heading from this section, it says the detail of income, and then it says income is in parentheses, losses is not. From equity investments is as follows. Here, they flip-flop the parentheses. Usually, parentheses are used to denote a loss. Usually, income has no parentheses. It's a positive number. But I think they flip-flopped it here. And so what you're seeing with JUUL is because it does not have the parentheses, it lost money. This is totally against how financial statements are usually prepared. And that's why with these financial statements, it's so important to read every last word and to really think about it. It's so confusing how they did this. But quite frankly, the way I'm interpreting it right now is this company lost money in Q2 on JUUL. So this thing sheds over $6 billion of market value in a single day, but the company actually lost money on JUUL, which is so strange why it would be trading down so much. But again, we don't know further than this loss of 100 million what's really going on behind the scenes, and maybe the market knows something I don't. I think what the market is saying is just, hey, in general, government's attacking this company, it's worth less. And honestly, I think that's fair. The current administration, the current FDA, they're just attacking the company. And so I think that's why the market does not like it. But I see value there. I'm buying into value. And eventually I will de-risk the portfolio by extracting money out because the starting yield is so high. I just take cash dividends, put them elsewhere. It de-risks it every single year that goes by. And so I want to share one last screen. As you can see on the screen right now, just let's look at their balance sheet. If I had one critique of the company, perhaps it would be the balance sheet. It's nothing really wrong with it, but you can see that they have a negative shareholders equity, and you can see the debt is kind of high at $27.9 billion. We know interest rates are going up. It's going to cost them more to carry the debt. Quite frankly, the reason their balance sheet is not so great is they don't want to be more of a target for litigation than they already are. And so they want to get cash to shareholders, because once it's in my pocket, it's safe. Once it's not in my pocket, if it's at the company, it's not safe. And so that's why the balance sheet is not as good as it could be. But quite frankly, I would like to see the balance sheet perhaps improve just a little bit. Whereas Altria is not a core stock of mine, it's a close runner-up. It's one of my favorite stocks. It's near and dear to my heart. I've held it a long time. If you're over on Patreon, I did a whole nother video on Altria. I'm not going to go through the details here, but for a while I stopped buying Altria. Now I'm buying it again. If you want to learn the 4 phases of my journey with Altria, check out my Patreon. At the corner patron level, I have bonus videos. I'll link to that in the pinned comment below. I share my complete stock portfolio, percentage allocation to each position on corner Patreon level as well. But needless to say, I'm buying Altria again. I'm not going crazy here, but I see value and I'm using it to boost portfolio level yield because I see it as a smoking hot deal. Now, of course, I know the critics are going to come out and say that the reason the government is coming after this is it creates a tax on society because it could create allegedly healthcare issues, and then it's up to the government and society to rectify those healthcare issues. That is perhaps a valid concern, but whereas I always come from things in my investing career and kind of my political and social views, is I believe that humans and adults should be relied upon to make responsible decisions for themselves, and that in general it's not a good idea for the government to dictate what we can and what we can't do other than the basics. And certainly the government, you know, who are they to say that a responsible adult cannot enjoy the simple pleasures of life, like taking a break to partake in the types of products that Altria sells? That's my humble opinion. Anyway, I'll see you in the comments below. If you enjoyed the video today, please don't forget to smash that like button. It means the world to me. All right, in terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. I'm just sharing my journey here on YouTube for fun and entertainment. I am not sharing any type of financial advice. Now, in terms of a disclosure, I own the stocks mentioned in the video today. I'm long Altria, ticker MO, BTI, ticker BTI. I am long Philip Morris, ticker PM. I am long Universal, ticker UVV. I am long Starbucks, SBUX. I own all of those stocks in my personal dividend stock portfolio. Just sharing my journey here for fun and entertainment. There's a lot of risk with investing. I love you all. I will see you in the next dividend investing video.